Welcome to CEO Interviews, a production of Gorecom, in which we take the time to speak with small cap executives about what's going on with their companies. With us today, happy to have him back, Karim Nanji, CEO of MRBL Financial, trades on the CSE under MRBL, great logo, great stock symbol, and for our friends in the US, MRBLF, and for our friends in Europe on Frankfurt under 2VO. For those of you new to the story, here's the best way to understand MRBL. We've all heard about how artificial intelligence is being used for our personal health and wellness via these wearables, right? So they're delivering personalized analysis and recommendations for our health. MRBL does the exact same thing, but for our financial health and wellness. They're a fintech company that's using the power of artificial intelligence to help educate their subscribers to build and manage their credit to improve their financial wellness. And they go way beyond credit scores. It's not a credit score app. Their artificial intelligence gives them specific recommendations, for example, on when to pay bills, how to prioritize debt management decisions, and all the things that you and I wouldn't know about what goes into getting a better and better credit score. It's a big problem. 50% of Canadians are living paycheck to paycheck. Same thing probably down in the US. For every dollar of income, carrying $1.7 in debt. Timing is perfect because of this pandemic. Adoption of fintech, as you can imagine, has accelerated dramatically, with 71% of people in the recent survey saying they're now managing more of their finances online. Karim, welcome back.
Thanks for having me back, George.
Great to have you. I love artificial intelligence. I think it should be everywhere. And I love the fact that you've incorporated into your MyMarble app. Before we get into the specifics there, how big of a problem are you guys solving? Because I don't think a lot of us realize, especially the ones of us who are banked and have a little bit of success and comfort and some job, we don't realize how big of a problem this is. How big of a problem are you solving?
Well, it's a significant problem, George. You you just shared some of the significant stats in your intro there. But when you look at the overall situation both in Canada and the US, you're also looking at like 70% of each of the populations really worried about how they're going to be able to pay their bills without going further into debt over the next 12 months. And the problems, the stats are very similar in terms of percentages here. But when you compare it to Canada and the US, just the sheer population numbers are just astronomical in terms of the opportunity in the US. Just last month in Canada alone, you had a 20-some-odd% increase in the number of insolvencies just in that month, right? With what's actually happening now. So you're kind of seeing the tail end of the subsidies and the soft landing that we've kind of benefited from here in Canada. But the problem is still out there.
So people are going to need help. We know that. They've always needed help. I think people have had weak credit and poor financial wellness for a long time. And not that's their fault. I just think the way the structure is set up, if you don't have some form of wealth, if you're not credit worthy, you can't go to a traditional bank, right? You can't walk in there and say, hey, I need a loan. They look at your credit score. They say, George, your credit score is, a C+. So we can't do anything for you. So artificial intelligence is the solution. How is the adoption of AI and in your financial wellness platforms in terms of acceptance? Are people willing to trust? Are they ready to trust artificial intelligence solution? Tell them how to get through the maze of managing their debt and credit and finance?
Yeah, absolutely. So we're seeing a lot of traction in the subscription-based part of our business on the MyMarble platform. You've seen the growth in a lot of the wealth tech out there with respect to robo-advisors and AI associated with wealth management. The same thing's actually happening on the fintech side with respect to credit and cash flow budgeting. And so people are looking for help. What we've been very successful in doing is that showing Canadians that when you're actually looking at understanding financial principles with respect to savings, debt management, improving your credit, and giving them the real data associated with their own bank accounts or their own credit reports, tying that together and giving them a path into how this specific recommendations impacts them, it ends up becoming a real winner for that individual, for that Canadian, because we're using real data along with principles and help and showing them, but tying that into their goals too, George. It's like a lot of people don't come in and just say, I need to improve my credit. It's all, and the backdrop of it is, I need a loan for a car. I need a mortgage. I need to refinance my mortgage. And then, so what are their specific goals? Because we're all snowflakes. And how do we help them specifically in achieving their goal? And it's not necessarily, I want to improve my credit score. The credit score is a means to an end, right?
Got it. Got it. Now, you're still in ramp up phase because you're growing your partnerships, and I'm going to talk about that in a second because that's great. I love how your business model is evolving and that validation you're getting. But in the meantime, what kind of feedback even now have you been receiving from people who've downloaded the app? Because that's really where the proof of the pudding is, right? Where there's
Yeah, exactly. So
what kind of feedback are you guys getting?
So very good feedback in how we've been able to help individuals achieve their goals. We're also making some updates into the platform to associate it very much. The design is very goal oriented, so we can attach that goal. You mentioned in the beginning about fitness apps. And we're measuring, those fitness apps, you measure calories, you measure weight, you measure what you're eating and all those things.
Right.
Same thing applies to personal financial fitness as well, is attaching the goals and providing them insights on how they're measuring against those goals. So that was feedback that we received from the market in terms of our consumers. We're incorporating that into our product. And we're also starting to get a lot of traction from the partnerships that you just talked about right now, where the B2B partnerships are now seeing an opportunity to leverage a MRBL platform in helping their consumers achieve their specific goals as well, right? So the software works, and it's not necessarily the AI, but the platform itself is very much an engagement platform that other small, medium-sized businesses who don't have the ability to invest a lot in technology can leverage our platform either through an API or through a white label format and offering it to their consumers to help them be sticky, right?
And I love that about your business model. I think that's great because if it was just B2C, if it just MRBL trying to get George and Mary and John and Helen to sign up, that's a tough business on its own because you guys spend a ton of money. But you've got this B2B, and that's what I want to talk about here since we're kind of moving towards this. For example, Agoracom one day could partner with MRBL and say, all right, we want to partner with you. We want Agoracom users and members to use your platform because we're not going to invest and we don't have the expertise. What's the point? What's the point in creating the wheel a second time, right? And reinventing the wheel. So since we last spoke, you've struck partnership with Jensen Graph Risk Management, 55 Rush and his parent Life Network, Fintel Connect, and 15 auto lending companies. So before we talk about the nature of the partnerships, is that third-party validation because you're getting partners in the finance world saying, yeah, we want to partner with MRBL?
Absolutely, right? You just mentioned right now the bloody red ocean that happens in the direct-to-consumer approach, because there's a lot of players, a lot of other competitors or players in the industry that are competing for the same customer. So what we find with these partnerships and the validation it provides is that these other businesses are looking for solutions like this to be able to provide to their own ecosystem, to their own consumers, to be able to monetize, keep them sticky. With Parent Life Network, for instance, with Rush 55, is one of our strategies with experiential marketing and showcasing our product in areas where it's more lifestyle rather than I need a loan, and I needed credit. Yeah. You're going to see some other attraction that we'll be getting in the next little while with respect to other platforms that are selling benefits to employers for their employees. And a lot of what we're finding is employees or employers are looking for solutions where they can say, how do you help our people with financial wellness? And so that's one part of the validation. The auto lenders that you mentioned right now, and a lot of these are smaller players in and of themselves, but they're competing in an industry. They're getting people coming in, they're declining some of these people, and then these everyday Canadians end up leaving. And so these companies are looking for ways to be able to engage their consumers, keep them around, keep some loyalty, and provide them additional services along with the associated data, because the data that's coming in allows the technology to, okay, you didn't qualify for a loan today, George, but you're still around. And then, hey, how's the pre-approval down the road, right? You see the same type of validation with some of the large transactions that happen between Intuit and Credit Karma, MasterCard and Finicity, where the aggregation of the data, both on the bank account side as well as the credit side, allows companies like us and them to be able to have the data to improve our product and be able to potentially pre-approve these consumers for offers down the road.
And that's what I really love about your business plan, because not just a case of I need another product to sell to my customers, so let me just offer a marble and I'll get a residual off that. What I like is the massive ROI. So if I'm George Calm Auto Lending and I have Karim walk in the door and he wants to buy a car from me, but his credit, just isn't there. In the past, I lost you. It's like, sorry, Karim, you couldn't qualify. Can you come up with a bigger down payment? No, I can't. Goodbye. You walk out, never see you again. But now, if I understand it right, Karim, I have the opportunity to say, well, Karim, look, you're still going to need to get a car. You're not going to have the credit worthiness. Instead of just walking away and wandering and looking for a miracle, why don't I suggest that you download the MyMarble app, and we'll help build your credit together so you can come back in 2, 3, 4 months from now and get to where you need. So it's really an ROI vehicle for a lot of your partners, right?
Absolutely. The ROI vehicle is actually related to their core business, not some residual income through a referral partnership, but how do they do what they're currently doing, but doing it better. One of the other big things that have come out of this, George, is the importance of financial literacy and education. Right. And so the platform, you go to mymarble.ca, and Marble Maestro offers free financial literacy in the areas and content around credit, budgeting, debt. And so it's very important for those people who are transacting in the credit space to learn a little bit better about why things didn't happen exactly the way they should have at the time of the transaction. But a lot of businesses are now focused on, and then the platform also allows individuals to know before they even go. So if you've got a goal and you want to buy a car in the next 2 or 3 months, let's find out now before you actually go and sit before the finance manager at the auto lender space. Let's know before you go, right? This is what you want. This is currently what your situation is. This is what you can afford. And these are the steps that you can take, because everybody wants the best rate. It's not that a lot of people don't qualify. They do qualify, but they don't get the best terms.
Oh man, I love how you're bringing, the best terms. Let's face it, it's not equal, right? In this system, people aren't treated equally, and I love that you guys are really democratizing finance. Let's talk about your business model now. So clearly, partnerships is a big part of it. A really big part of it. How eventually, and it's great that you guys are in this, kind of pre-revenue phase or pre-really, ramp up growth phase. But how does the revenue model work and what do you expect in terms of the next 3, 6, 12 months in terms of ramp up? And I'm not asking for projections, but are you now in that ramp up phase because you sign these partnerships, onboarding them, and hoping to get them going?
Right. So there is a little bit of technology integration depending on how the partner wants to do business. A lot of them have their own unique user experience that they want to stick with. And so integrating our solution into their product. And some of them are not as technology savvy. And so a white labeled MyMarble platform kind of works for them. You did, if I can just take a step back for a second there, George, you did mention our partnership with Jensen Graph. And that's an indication that our platform is now turning into a marketplace where we can leverage other people's products as well and selling them both to our consumers, bringing them into our platform, and work with partner products as well to be able to that. So you're going to see a little bit more of that happening over the next few months with new partnerships with other partners' products on our platform. You're going to see product development. In terms of the revenue, the subscription model, we're starting to get traction on that.
What are the prices, by the way, just for people at home? What are the tiers, the subscription model tiers that you've got?
So it's we've got multiple pricing packages depending on the appetite and works for the consumer. We've got free trials on these programs, a freemium model and a pay-as-you-go model, and then we have pricing tiers where if the subscriber is looking for 3 months, 6 months, or 12-month packages, we can give them a discount for paying for the package up front. Depending on their unique situation, we'll make the recommendations to them, and then different pricing tiers in between, right? So there's a premium model, and obviously the premium at the top end, and then you've got basic and pro in the middle.
What are the rates there? Are you able to tell us that? Premium, pro, what are the rates per month, or how you price it?
Right. So on a pay-as-you-go model, the freemium is obviously free. There's a $9.99 pay-as-you-go model. There's a $19.99 and then a $29.99 pay-as-you-go.
Okay.
And then if you go for a term, and you then there's discounts on the math there.
And there's a big ROI for me as well as a subscriber, right? So even if I'm paying the premium $29.99, if I'm able to help improve my credit score just enough, or get better, obviously if I get better priced product, that's a given. But even if you help me improve my credit score just enough to get a lower rate, well, the ROI for me is monstrous, right? Because if
you look at a $300,000, $250,000, $300,000, $400,000 mortgage, it's not cheap to buy a home in Canada, but a quarter point difference for $30 a month that's where you start to show the value to the consumer, right? And you can do the same thing on the car loan as well, right?
So how does it, last question then, when do you guys think, or actually, let me ask it a better way. What's the first number you want to get to? Look, ultimately you want to get to 1 million users and more millions. What are your first goals? What are the first milestone numbers that Marble wants to get to over the next 12 months, let's say?
Right, so 100,000 users on the platform. To be able to get them in there transacting on the SaaS platform, additional numbers that are augmented by some other products that we're going to be adding on. The way we've kind of built the platform is that you automatically become a MyMarble user, even on the freemium package, but then we're going to have a lot of add-on products. Could be a GIC savings loan, could be a credit card, could be insurance. Right? So the platform actually starts helping. And as we start moving into the verticals, point of sale, buy now, pay later partnerships are also in the cards as we're leveraging, because the whole point of financial wellness, like things like credit score, why does it really matter? It's a means to an end, George, right? So credit score matters because people want to acquire something. It could be rent, it could be a car, it could be a mortgage. So they've had a moment where they've had a decline or poor financial flexible terms, but they want to get back to that, and we can help them get that in actually participating members in the economy in general to purchase.
Even a better credit card rate at the end of the day, right?
Exactly.
So last question. Given, I mean, I've been doing this for 24 years. So whenever I see partnerships of the magnitude that you guys are signing and the quantity of them, I know that, and I think investors at home should infer that these partners aren't signing on with you just for the hell of it. They're not throwing on the wall to see what sticks, right? They have serious businesses, they have serious customers, and they're only going to take on things that they think are going to be very valuable to their business. So there's no doubt there. There's no doubt about you're setting the stage. How confident are you in the future of Marble? And given the fact that we're now essentially almost halfway through the year, how confident are you in the outlook for the next 6 to 12 months in terms of what you guys were hoping for 6 and 12 months ago?
Well, absolutely confident, because over the course of the last year, the pandemic and what was happening with the pandemic obviously plays a key role, right? With respect to what's happening with consumers' expectations. But now you're starting to see things play out with respect to subsidies, with unemployment. There are people that are still hurting out there, but we've also found that a lot of people are very aspirational with respect to their goals. So it's not really people that are down and out. It's people that are looking very positive towards the future. You've kind of got a little bit more of an understanding of what the new normal is going to look like. We are looking for expansion into new geographies coming in the second half of this year. And the market is actually coming a lot closer, right, to our solution. As we're moving forward to the market and providing the solutions that individuals are looking for. So we're extremely confident with some of the partnerships that we're working on, the ones that we've already put out there, and some of the other things that we've got coming in the pipeline.
And I'm going to add in my 2 cents that anytime you have a combination of artificial intelligence, fintech, financial wellness, and all that, to me, that's just a winning combination, because I know that that's where the world is going. Absolutely. The world is absolutely going there. The days of my wife and I need to make an appointment to head down to find my financial institution and talk with Karim, our account manager there, for an hour. That's too slow. It's too rigid. It's not flexible enough. Whereas having an app in real time, knows my finances, knows what I'm doing, makes adjustments, that's just where the world is going. So I'm really excited about you guys, but I want everyone to hear it from you before I put in my 2 cents.
I appreciated that, George.
Last word to you, Karim. What do you want your shareholders and the investment community out there to take away from where you guys are at today?
So we've got a lot of great things coming. It's a perfect opportunity to get involved in the fintech space in a growing industry with respect to the underbanked. It's a great opportunity for us, and please look forward to some of the exciting things that we've coming down the pipeline.
Thanks, Karim. Thanks for being here. Really appreciate it. Can't wait to have you back.
Thanks very much, George.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, or your favorite podcast platform, to Karim Nanji, CEO of MRBL Financial, trades on the CSE and the stock symbol MRBL. For our friends in the US, MRBLF, and for our friends in Europe, 2VO on Frankfurt. You've heard what he's had to say. You've even watched, if you've been watching some of the graphics and things that we've been putting up in front of you. Now you've got to do your due diligence. And guys, Agoracom's thesis, as you know, is this decade is going to create 3 times more wealth from technology than it has in the last 3 decades combined. That's because technology is getting more and more granular. Artificial intelligence is one of those pillars for us. Artificial intelligence and fintech, given Agoracom is, quasi fintech, is a combination that's unbeatable. You got to decide if MRBL is going to be a successful player in that. And the way to do that is get to Agoracom, take a look at their profile page so you can get a good overall picture of what they do, because we know that fintech AI isn't something that everybody understands right away. You're going to get a great overview. Then from there, or you can see the URL right above Karim there, go to mymarble.ca, do your deep dive due diligence. If you're a great small cap investor and you believe in the future, you've got to do the deep dive on mymarble.ca. Even download the app, go take a look at it. Use the freemium model for now, just to see what it's like. You really get a chance to touch and feel this company's product. Hope you do your due diligence. Don't say 12 months from now we didn't tell you so. Have a fantastic day. See you next time.
Thanks, George.